another reason why Nvidia was had such great earnings is because if you remember around that time, cryptocurrencies and everything was also going to the moon. So your Bitcoin, your Ethereum, and people that mine Ethereum and crypto, what do they do that on? Well, they do that with the GPUs, with graphics cards. So Nvidia made a killing during that time because you couldn't even buy a graphics card because all the miners were buying them up, and the ones that were available were three times the price because people were scalping them. And like, Nvidia and AMD, they couldn't even keep up with the demand. They were able to overcharge and they were sold out, and their stock ripped to the moon. But now obviously lockdowns are over, things are trying to get back to normal, and what really killed Nvidia on the earnings and the projected earnings is crypto. Is We're in a crypto winter right now, and I think Ethereum is about to move over to proof of stake. So you're not gonna be able to mine Ethereum anymore. There's going to be no more Ethereum mining. So what that means is Nvidia is not selling a billion graphics cards and charging exorbitant prices for them, and that reflected on their earnings. So they had a bad sell-off. And let's take a look at the Nvidia chart. So basically, that's why this stock was even on my radar, because I'm paying attention to stuff like that. And you have to know what's going on in the market to be successful. It's like I said, you need to have a lot of edges, and a big edge to trading is not only technical analysis but also fundamentals of a company is, basically their earnings, their projected earnings, sales, how much cash they have on hand, blase squaze. And it was earnings. Nvidia had their earnings recently. So let's look at this Nvidia chart. And look, as you can see, Nvidia had a pretty nasty sell-off. Where we're going to draw the trend line from. Let's start it from here. Again, to whoever it applied to. I like them thick. But anyways, let's go ahead and put a resistance line up here as well. So if you look at these charts, if you were to look at the other trading instrument, the SOXL, which SOXL is the 3 times leveraged bullish semiconductor ETF. You also have a SOXS, which is basically the inversion of that. Instead of SOXL, it'd be SOXS, and that'd be 3 times leveraged to the downside or short. And I'll show you guys that one. But if you were to compare like this Nvidia chart and maybe the AMD chart and the SOXL chart side by side, they'd probably all look pretty similar, if not identical. I was watching it. The reason why I was watching SOXL is because Nvidia, when they had their earnings, it wasn't good, and as a result of that, it sold off. So when you're seeing around this time period Nvidia sell off, that means SOXL is selling off, but it's selling off even more because it's 3 times leveraged. And AMD probably see the same thing. And there we go, just like I said. You also have to understand relationships because these stocks all have relationships to one another. So a sell off in one is gonna more than likely mean a sell off in the other one that's similar in the same type of business or their competition, etc. Because basically a decrease in demand for any product, no matter what the company is it's going to impact the bottom line to all companies that sell those products. So that's why these all look the same. Basically, that's why, again, SOXL and SOXS was even on my radar.